Alright, to continue our series in the second chapter, I want to talk about liquidity and explain liquidity for you guys. Liquidity is one, if not the most important thing and aspect you need to know after psychology before going into the concepts and how to actually trade. The reason for that is because the market, especially the forex market, but any market, even the crypto market, it moves based on liquidity. How much volume there is for sales and how much volume is there for buys. In order for price to take, let's say for price to go up, we need to take liquidity from the downside. So we build volume and then use that liquidity to boost price up. So let's take, for example, we have a bullish trend. And you can see every time price has a pullback to the downside, it gathers liquidity in order to push price higher. So we grab liquidity, we push price higher, we grab liquidity, and then we push higher. Liquidity is going to be one of the main thing we're going to look for before taking a trade. Liquidity lays on every time frame, so we can have liquidity on the 5 second as well. That is why it's important to understand how liquidity works. So liquidity, you can think of liquidity as stop loss orders, buy orders, sell orders, or the orders in the market. The whole order flow chart, it's based on liquidity. But the main liquidity that we're going to use is that of stop losses basically, or where the retail traders get into the market, or where retail traders have their stop losses. The reason for that is the market makers, the liquidity, the algos that run the market likes to grab liquidity from the retail traders because there's so many of them, and then use that liquidity to go towards the intended price. The two main liquidity points, actually there's more of them, so we'll go over them one by one. First liquidity that we have is where there's equal highs or lows. Second liquidity is when we have a trend line liquidity. Third one is liquidity above daily highs and lows, and then that's that we're gonna use on the 4-hour, 12-hour and daily highs and lows. And fourth one is session highs and lows. The main one that we're gonna have is actually the equal highs and lows. So what's equal highs? Equal highs is basically when we create a double top, or equal lows when we create a double bottom. So if you have any experience in trading retail, you know that a double top means you should sell. That's what's being taught in the most basic course. If you have a double top, you have 2 rejections to a level and then price should bounce down. But that is wrong, because what this does is actually it creates liquidity above. So because you have a reaction here and price came back to bounce, you created equal highs. So 2 highs at the same level, which create liquidity. Why? Because retail traders, they start selling here once you get the second rejection. So they try to take sells here, and of course their stop loss is going to be above the level, above the equal highs. What that does is it creates liquidity, a lot of liquidity in that area that's going to be taken by the algos in order for price to move in the intended direction. So the intended direction is bearish, but because we established equal highs, what's going to happen is it's going to give a nice reaction for people, for retail traders to be more interested in taking sells. So when price comes back again, there's more people taking sells here because there's going to be a triple top. And then what price does, it spikes up, comes back down, and then continues on its way. And this is the point where most retail traders, they just quit because the market is manipulated and they got stopped out, and then price just dumped into their take profit, playing with their emotions. So that is why it's important for us to use liquidity to enter the trade. So we're not going to enter here, we're going to wait for this, and we're going to enter here, which is going to be the safest entry and the best risk reward to take the move down. So once we'll understand how to locate liquidity, we'll understand how the market moves, and we can start taking good trades. Same thing for equal lows. You have the same pattern, which usually happens. Create equal lows. They can be relative equal low, so it doesn't have to be at the exact same level. You can have it even like this. So a small difference, still equal lows. I'm gonna show you some examples. Liquidity taken, this is gonna be called a change of character or a charge up, and then the retest, and here is gonna be our entry to take price higher. Now this pattern happens on every time frame, so there's no rule to it. It can happen on the 4 hour, 1 hour, 12 hour, doesn't matter, even 1 minute, even the seconds time frame can happen on basically any time frame. But if we'll be able to identify it, then we can use it in order to add it as a confluence to our trading plan. Now, second thing, trendline liquidity, which is basically a similar thing. Everyone knows trend lines. When you have price moving up, you're gonna have a trend line, which most people use to take buys. So when price comes back to tap the trend line, they take buys to take price higher. So usually when there is 2 or 3 more taps and you create this trend line, it builds a lot of liquidity. So when price is gonna show reversal signs, instead of tapping and having a reaction, it's gonna just drop really hard through the trendline liquidity, taking all the liquidity, and then start building buys again and exploding to the upside. Same thing the other way around. So trendline liquidity, another good liquidity spot that we're gonna use. Next one is 4 hour, 12 hour, and daily. We're gonna use those specific time frames to look for highs and lows that's gonna be taken. Perfect example now on EURUSD. We had liquidity below this 4 hour low. You see the 4 hour low, price came in, wicked it out, and then we have the reversal playing out right now. You can see the same thing here. We had the 4 hour high, which was taken out, and then price dropped. If we go on the 12 hour, you can see the same thing. 12 hour high being taken out, reversal happening. Same thing here, 12 hour low being taken out, we see a reversal happening. Same thing here, old 12 hour high taken out, and then a nice reversal. Same thing here, we took out this old 12 hour low, and then we had a reversal going. So, and also if we go on a daily, same thing, daily. You can see it even better here, daily high, taken out, dumped, daily high here, taken out, dump, same here yesterday, daily high, taken out, and then another drop to the downside. So these are liquidity points once you get them taken, and also they're going to be objectives for us. So you're going to watch liquidity as a place to enter the trade and also a place to exit the trade. So if we had shorts playing out from this level here, let's say, then our exit point will be after we take liquidity. So in this case, we had liquidity. First liquidity point was this 4 hour low here, because we created the high, we took out liquidity from this high, and then when price comes down, that is our first take profit point. So that's where we're gonna look to exit the trade, because we took out liquidity from the 4 hour low. So once we took liquidity, we know there's a potential reversal coming in. So that's very important to understand. So that's a good way to exit. Now, final thing is session highs and lows. Now, because there are 4 sessions in the day, Asia, Frankfurt, New York, London, and New York. We have 4 sessions, and they're in the same order. They're from weakest to stronger. So Asia is the weakest, then Frankfurt is the weakest, then London is the weakest, and then finally, basically, New York is the strongest. So that means price and a session should take out the previous session high or low, and we can see a reversal. So let's take, for example, Asia session, because every single day, every trading day starts with Asia session. So Asia session creates the high and low of the day. It's going to be a separate video about Asia session, but basically just want to explain the liquidity now. So once we take out the, let's find an example here. You can see, perfect example. Asia high was taken out by Frankfurt high, and then we saw a nice reaction. And then, no, actually what happened, let's go back here on a smaller time frame. So we had the Asia high that you can see was taken in Frankfurt, and then we had a nice reaction, and then London open came in. What did it do? It took out Frankfurt high and then had the reversal. So again, sessions high and low, highs and low are used as an entry point and also an exit point. So if I take a London trade from this point, because I took liquidity from the Frankfurt high and I had a bearish order flow, I entered the sell here, let's say, after we took out Frankfurt high. My target is gonna be the next liquidity point, which in this case is Frankfurt low. That's just the first take profit that we can take, because as I said in the previous video, London session is gonna be for a more aggressive trade. So we're gonna look to scalp, we're gonna look to enter the trade with a good stop loss and exit the trade as fast as possible. So that is why the first take profit is the next liquidity point, which in this case was Frankfurt low. So we're gonna take profit from Frankfurt low and then target the next liquidity point, which is Asia low. So you can see price continued, took out Asia low and then had another reaction, and then what happened? Price went after the next liquidity point, which was the 4-hour low, or in this case it was even the 12-hour low and even the daily low. But let's just take it a 12-hour low, this one. So price came and took the 12-hour low as the next liquidity point. So we had 3 liquidity points that were successfully mitigated, taken out, and then price continued to do the same thing. We're going to use liquidity to set objectives in the market. Before any trade we take, we need to have an objective for the trade. So for example, on this buy position here, my objective is going to be to clear this high and touch the 1.11 level, because we have liquidity here, we have equal highs, you can see. So my objective is going to be that level right there that I want to be taken out. Before any trading setup, we need to have that objective. So even if this doesn't play out and I get stopped at the break even, the next setup that I'm going to trade, as long as it doesn't invalidate my idea, my setup, for every trade that I take, that's going to be my objective. And even the objective for this week for me was the 1.110 level to be touched. Until that is touched, I don't have any other bias. So I'm going to wait and try to take a trade to complete that objective. So that's basically liquidity summed up really quickly in a video. We're going to talk about how we use liquidity, how we use basically liquidity inducement, a new term that's been popping off, in order to take a trade. We're always going to wait for liquidity to be induced before entering a trade. So that's going to be the 4 liquidity points, which is equal highs and lows, trendline liquidity, daily, 4-hour and 12-hour highs and lows, and also sessions highs and lows. The sessions highs and lows are the weakest, and they go all the way up to daily and 4-hour highs and lows.